Good evening and welcome to the Accendo Traders Group. This is our video trade plan for Friday, May 30th, 2008. AccendoTraders.com, effective trade plans delivered daily. Each day we go through our routines to make sure that we're on the right side of our trades, make sure we're keeping our eye out for any news coming scheduled in the market that could affect our positions. And as always, we want to spend time with our family, have a little fun. So today in the market we had some good news. The GDP was revised higher than what was expected. Unemployment, there was a little bit more than was expected, but for the most part, it held steady. We have mixed results from the retailers. What I don't have on here was that initially the crude inventory numbers came out, and the oil stocks took off. It was a very bullish for oil report. But in the end, the oil stocks went down, and that's probably what had a lot to do with the up move today. As oil retreated, the market went up. We also had some good earnings, as we said, from retails. Costco and Big Lots had good earnings. However, Sears had an unexpected loss. Although, watching a little bit of CNBC, they said we don't know how anybody could have expected that. And after the market today, Dell beat estimates, and they're up in the aftermarkets. And we really didn't have anything significant on the upgrade and downgrade sector. There was some talk about the solar sector, and everybody was target was lowered besides First Solar. But again, don't really think that affected tomorrow. Tomorrow, we have some more inflation data with core inflation, Chicago PMI, and the revised version of Michigan sentiment. No real important earnings tomorrow, and we still have, this is taken care of today, UNP, and then we have a couple other ones coming up also. Here's the thing. Notice that we don't have a lot of news. We don't have news coming up. And so we really have to be careful and watch volume now and see what volume's telling us about the mood in the market, because we don't have news driving us unless you want to count the way oil is going up and down. Let's go ahead and take a look at our flag list. Okay, and as we begin to look at our flag list, obviously our YouTube folks take a look and see what we've unflagged for one reason or another, because, about our time restraints. And as always, you can get the iPod version. And I want to say at this time that to go to my blog, michaelglass.com, and go to the blog, and Dean Callahan, a good friend of mine, Dean E. Callahan, I've been talking about it for the past week that, my thing is all about trade plans, and I've been talking about that for the 2 months here. And anybody that's been with me long enough knows that, this goes all the way back to, I started these videos 2 years ago, and it took almost a year off, and now here I am back. And michaelglass.com, why every trader should have a trade plan. Dean wrote an excellent article that very artfully talks about why we need to have a trade plan. Great comparisons to being a traveler. And there's other articles on there that gets more into the building of a trade plan, yada, yada, yada. But this is a great article. I talk about Rich Dad, Poor Dad, and how I've read that series. And what I liked about it was that I was an entrepreneur, and it really, to some people who say it's to a discredit, it really brings the language down and talks in simple terms. And I think he artfully conveyed a lot of the things that I've been trying to, and I'm so appreciative. So Dean, thanks. michaelglass.com, go to the blog, why every trader needs to have a trade plan. And what I'll say is this. At this point, and I said it a second ago, what we need to be watching is volume and see what's going on, because we're not having the news project us. We got to see if the traders are buying into what's going on. And for the most part, the volume is staying the same. It's not more, it's not less. And the reason is that because you can see as we come up to resistance here on the NASDAQ, come up here to resistance of the moving averages on the Dow. Here's the SPX, and we're coming up to resistance of the moving average in the uptrend line. As we try to break these things, what do we need? We need a catalyst. Is it news? Is it volume? What's going to break us higher? Otherwise, is there a potential for us for this just to be moves on light volume? And so we got to watch that, and I'll talk more about the volume in the new stock section. But in short, we bounce. We're continuing to move higher, sort of like the 200 moving average. As I changed my template here, we have to see if we have a catalyst, if we're going to have the volume for the bulls to push us above these resistance areas. And you can see, look at the NASDAQ at the 200. But the indicators have rolled back up to the bull side. Look at the indicators. So the market certainly looks good, and most of the reasons why I unflag things is because the market does look better, and so I'm looking for the bull side. Look at BNI. Remember we said we're not going to ignore transports anymore. I unflagged it obviously because of the move. What I did keep is Apple. We love Apple. We're waiting for this to break out with the new iPhone and a conference that's coming up. Same thing with RIM down here and X. And we have a lot of stocks that are going to be at the 20 moving average. With oil retracing, you can see USO and NE, NOV, COP. A lot of these stocks are retracing back to, on the down day, back to the moving average. So we're going to have to see what's going on there. But again, I'll talk more about that in the new stock section. Okay, so let's go ahead and begin our education portion of our video. And it's going to be a little short today because we're ending another section, and we're going to go into the some of the safeguards of setting up a trade plan. And so yesterday we talked about the lure of trading, and we talked about the comparison of trading to gambling, trading to going to Vegas. And we talked about that when it comes to gambling, there are rules. You have to ante up. You have to make a decision before. To get into the game, and realizing that I'm going to get into this game and I can lose all of it from the beginning. Once you get into the game, you cannot get out of that game. Or lose your money. And there is an expected end. There's a beginning, middle, end to any of these blackjack, craps, whatever. However, with trading, there is no beginning, middle, end. It's just data, and as far as the market is concerned, the market is just moving along, and you may or may not choose to interact with it. Even when you interact with it, it's not the beginning to the market. The market's just doing its thing. And you can choose to get out based upon, either your emotions or whatever. And you can choose to end too soon, too late, maybe the right time. Doesn't make a difference. But again, a lot of people talk about how risky it is, and I might as well go to Vegas. So there's actually an argument that Vegas is safer for all our poker fans. However, the thing about trading is that the market will not take you out. As I was just saying, you can enter a trade and the market will just go and go and go and go, and there's no ending. The market will just let you ride along until you execute the ending by ending the trade. Some people never end the trade because they've lost all their money and they just own the stock. And Mark goes on to say that unless you have the appropriate mental structure to end the trade in a manner that is always in your best interest, you become a passive loser. This means that once you are in a losing trade, you don't have to do anything to keep losing. You don't even have to watch. You can ignore the whole situation, and the market will take everything you own and sometimes more. And that is so true. I mean, again, how many of us have been in a trade where, you're sitting there praying, okay, come on. And the market's just moving, It doesn't care about who's on the ride. The market's just riding. And, the market's not going to come to a nice stop at the end and let the passengers off. The market is just a continuous motion, and we have to, as he says, have the mental structure so that when things go against us, we have to get out. I was talking with a friend of mine that I haven't spoken to in a couple of years tonight, and I was talking about the stock market, and I just said, the thing is, it's not about learning how to trade that's hard. It's learning how to control yourself and understanding that we're not going to make money on every trade. You're just not, We're not going to make money on every trade, but we have to cut our losers. We have to have a system that says, no matter what, when I get to this point, I'm out. You have to be who you are. That was one of the things we were talking about, a month ago. Be who you are, and you have to be consistent. And so, without that mental structure, without that trade plan in place, you have risk to lose everything that you own. I do want to say that go ahead and check out my blog for a couple of reasons. I'm hoping that people will start posting, questions or some comments on the video, just so that we can talk about it, dialogue about it. I do get questions individually to me, but I'm sure some of the other people might have some of the same questions. So it'd be nice to share that. Again, some people are talking about what charting program I'm using, what do I mean by alerts. So go ahead and post the questions to the blog. And we'll see what happens. I do want to say that thanks to Dean Callahan, who wrote the article, and I did post that today, Why Every Trader Needs to Have a Trade Plan. You got to go read that, Why Every Trader Needs to Have a Trade Plan. Excellent article that he wrote. And you guys know the routine. Read the rest. Thanks, guys, and I will see you Sunday. Have a great weekend.